XRP's price has exploded to the upside, but is now the right time to buy? Should we expect a correction or a continuation? Well, we're going to break down the technical position based on the psychology of buying and selling so we can see what's highly probable to occur next. So if you like today's video, like, subscribe, hit the bell notification. Let's dive into XRP. So XRP, also known as Ripple, their website, community-powered utility, and XRP, the ledger, is a scalable, sustainable blockchain. But what we're interested in is the price action. Like literally, the price has almost doubled since, the 16th of September. So in the last 7 days, or less than 7 days, it's gone from around 30 cents to almost 60 cents. That's a big deal for a top 10 cryptocurrency in terms of market capitalization. That's the equivalent of Bitcoin going from 20,000 to 40,000, doubling in price. The market cap also doubles in price. So the thing I want to get across today, how we're going to really deduce what's likely to occur next, is using something called Elliott wave theory. Markets move in fives and threes. And now that the trend has taken off with XRP, these patterns are becoming quite evident, and we're going to break it down in a lot of detail for you today. And if you want to take your Elliott wave training to the next level, I now have my 4 Secrets Crypto Trading Masterclass that really teach you how to read the markets like a pro and really understand what truly drives the market so you can be 2 steps ahead as opposed to 2 steps behind. The link is in the description. It's free. But what we're going to cover with XRP today, you're going to see more in the masterclass itself. So with XRP, let's look at this. Do you see any patterns in terms of fives and threes? And if you can spot these, you'll separate yourself from the crowd. So one of the things, we're going to use 2 to 3 degrees of wave counts. And what I mean by that is this. Because if you can see this, it's going to blow you away how you can really just anticipate what's likely to happen next. So when you see a market move like this and like this, like there's a move up and a move down, this move up tends to normally break down into a 5-wave structure in itself. These movements down also can break down to 3 waves and 5 waves. So we're looking for the waves within the waves. Why? Because it all reflects the psychology of buying and selling. That's what we're talking about over here. So we're going to do a few degrees of wave counts on this, right? So we've got this initial move up. That's really clear. We got this initial move down. And then we've got the next move up, a move down, and then an explosion to the upside. If we can really clearly articulate what is the psychology here in terms of Elliott wave, because Ralph Nelson Elliott in the 1800s, 1900s figured this stuff out, that is crowd psychology. Individuals are unpredictable, but crowd psychology, herd psychology, it's pretty predictable, right? So we're going to look at that in a lot of detail today. So I'm going to do it at a high level initially. So what we're going to focus on is this part of the market first. There's a particular degree of wave count. And then we're going to come back to what this looks like. And we'll break it all down step by step. So I'm going to do this. I just want to bring it in like this so you can really see what I'm going to do over here. So what is this looking like to me? Well, this in itself is called a wave 3. And wave 3s tend to break down to 5 waves themselves. And this will make perfect sense to you over the next few minutes. So we've got to move up. We've got to move down. We've got a very impulsive move up. And it looks like a textbook wave 3. We don't know if it's ended yet. So we don't know that yet. We should anticipate some type of correction called a wave 4. And then another leg to the upside. That's the most common, typical buying and selling behavior. Wave 4s over here tend to have a relationship with wave 2s. And there will be some type of similarities as well. There's particular ratios. We don't need to go into too much detail today because we want to see the wave 4 pullback is a typical profit-taking wave. And what we want to be aware of is the relationship between wave 1 and wave 3. Right, so there's a very special ratio called 1.618. It's the golden mean. It's a Fibonacci ratio. But what we're doing is measuring the behavior between the initial buyers and the next lot of buyers. And it's quite common that you'll see this. And what we'll do is we literally just measure this initial wave 1, project it from the bottom of wave 2. And the most common ratio for wave 3s is this 1.618. And we can see that we've just exceeded that. So we're now in the typical wave 3 zone. the typical maximum overextension is 2.618, which is this range over here. So we're talking about 52 cents to 62 cents or 60 cents thereabouts, and we're in that range. And we can ask ourselves the question, does this wave 3 also break down to a 5-wave structure, this wave 3 in itself? So this is called going into a 1 degree of a lower count. We're going to go into a 1 degree lower count. And I'm going to break it down for you in this wave 1 initially, because this also breaks down into a 5-wave structure. So I want to break this down so you can really clearly see this. Because if you can see this with all cryptocurrency, it will blow your mind on how accurate you can be with projecting these 5 waves. So we're now talking about, so this is a mini masterclass in itself, but we're doing it for XRP in particular, so you can see what's likely to occur next. So we just look at this over here. There's an initial surge, call that a wave 1, a pullback, wave 2, and a second surge, which is a wave 3. See how impulsive this is in comparison to this? Wave 3, a correction, a wave 4, and then a wave 5. And this is what we expect to happen in the latter part of the market as well. So we can actually put a count on this, and it will look like this. We just go 1, 2, 3, 4, 5. And the way you would articulate this, if I just make it a bit smaller so we can see that this is a microwave count, we can even change the color so it's easier to see. We call this a wave 5 of a wave 1, right? So we're getting very particular on this. And there's ratios that help us articulate what the end of a wave 5 is. So what you'll see, and it's like magic, right? This is like the closest thing you're ever going to see to a crystal ball. If we measure wave 1 to wave 3 and project it from wave 4, I'm doing that quite fast. There's 3 ratios, but the typical maximum, more often than not, is something called the 100% of wave 1 to 3. And check this out. Look how the price just tags the 100% and then does a correction. So we can use this information combined with patterns. So we got a 1, 2, 3, 4, 5 at a typical maximum wave 5 ratio, and then we get a reaction as well. And that's very common with cryptocurrency and other markets as well. And actually, it's what I cover in detail in my 4 Secrets Crypto Trading Masterclass. It shows you how to apply the 4 secrets. We're looking at 2 of them today. We're looking at pattern and we're looking at price ratios. But when you combine the other 2 ratios, you get something called a confluence of events where you become the casino and you have the edge in your favor so you can see what's very highly probable going to happen next. And if you can see that, then you can trade based on that, buy and sell based on that, and that just gives you just a higher probability of succeeding. So this is a free crypto trading masterclass. The link is in the description. I'm telling you, I put a lot of work into it, but I've put it into layman's terms so you can get it. So now that we can see that this wave 1 breaks down to a 5-wave structure, let's now move over to this current wave 3, the current wave 3, right? This over here. Does this look like, does this look like any type of 5-wave structure? Well, we've definitely got this initial move up. We got a move down. We got another move up, a move down, and then another move up. However, there's some Elliott wave rules and guidelines, and one of them is if this was a wave 3 of this 1, 2, 3, 4, 5, wave 3s tend to not be the shortest wave, right? Tend to not be the shortest wave, and want to be aware of that. So we won't go into too much detail there. What I want to actually cover next, is a wave count of one higher degree. So we've got this lower degree, which is the yellow. This is the wave 1, and we're at one lower degree in terms of waves within the wave 1. And now we're going to go one level of a higher degree. We go, what do you mean, Jackie? How does that work? All right, so if we just zoom out a little bit and we just pop in the chart like so. Because I want to give you context of what's very likely going to occur over the coming days and weeks with XRP. Doesn't mean it's guaranteed. It just means it's highly probable. But there's a few other factors, because we're only covering 2 of the secrets in this video today, but the other 2 secrets just give you a better indication of what's likely to occur. So the higher degree wave count here is we're going to take this part of the market into account. Right? We can't ignore this. This is very important. So this is a particular wave count, but there was something that happened before. So this is the initial move. So how this works, and this will give you a perfect context of what's very likely to occur, is this now becomes the initial wave 1, wave 2. Then the red is a 1, 2, 3, 4, 5 of a wave 3. Then we should anticipate some type of wave 4, and then a final wave 5. I'm going to just change this to an intermediate wave count, and we'll change the color to green so you can see the separation. So now what we have are 3 degrees of wave counts. And it's like magic, right? It is like magic. It's like having a crystal ball, because when you combine this with the Fibonacci price ratios, it's uncanny how accurate it can be. But what I'm really interested in is the practicalities of this. How can we use this to trade better, take profits at the right point, not buy at the wrong time, be patient for the ideal setups? So what we're looking at over here is a wave 3 of a wave 3 at some point soon. Right? We don't know exactly when. We can do a couple of other things to narrow it down. By the way, it's in the 4 Secrets Crypto Trading Masterclass. See if you can work it out. The other 2 secrets that I cover here, and then apply that to what we've already applied to XRP, is once we get a wave 4, it would normally be similar to this wave 4, but of a larger degree. This yellow, you see that wave 4, then we got this wave 5. We should anticipate something similar, and then a wave 5. It's called a wave 5 of a wave 3, right? And then once this is complete and it's relatively clear, then we should anticipate a wave 4 on the higher degree wave count, and then a final leg of a wave 5. If the green does unfold, 1, 2, 3, 4, 5, this is where you definitely want to be on high alert that we're more than likely going to get some type of correction. And what we're going to finish on today is what is a typical correction after a 5-wave move. Well, we've seen it very recently with Ethereum, right? We saw a textbook 5-wave move to the upside, and then we saw a 3-wave correction. But similar to how we saw this correction over here in the red, or even this correction down here and here in the yellow, or this initial correction down here in the green, we're likely to see a bigger degree correction. And the typical minimum is 50%, and the typical maximum is 78.6%. So we're talking about a big correction. So what's the conclusion with XRP? It looks like we still got a few weeks of sideways to up. This wave 3, a bigger correction, and then this impulsive wave. And when we see this 1, 2, 3, 4, 5, it's to be on high alert that we might be topping out, and then expect some profit taking to be recurring, because what drives price is buying and selling behavior. So now you can take my 4 Secrets Crypto Trading Masterclass. I'm telling you, it'll take your trading to the next level, it'll blow you away how accurate this is. So I want to finish on a quote before I clear my throat, or after I clear my throat. The trend is your friend. Ride it until its end, until it reaches its bend. So the trend for XRP is up. So we want to jump onto that trend. We don't want to go against the trend. We want to jump onto that trend and look for long opportunities. So when you take my 4 Secrets Crypto Trading Masterclass, we covered pattern today on 3 degrees of wave counts. We covered some Fibonacci price. I'll go into more detail. But then the other 2 secrets, combined with what we've already done, it just stacks the odds in your favor. And the higher you can get the odds and the confluence of events, then the probability is in your favor, where you become the casino. And you know, the casino always wins, the house always wins. And that's your job as a crypto trader. So take the masterclass, enjoy it, and I'll see you in my next video.